This is the AI News Flash for May 22nd, 11 a.m. UTC. First up, enterprise software giant Workday reported first quarter results that sent shares surging more than 11% in after-hours trading, decisively flipping the bearish AI script that has weighed on SaaS stocks for months. Revenue came in at $2.54 billion, beating consensus of $2.52 billion, while subscription revenue grew 14.3% year-on-year to $2.354 billion. Non-GAAP earnings per share hit $2.66, well above the $2.56 estimate, with returning CEO Aneel Bhusri declaring Workday is ready for this AI moment and that its AI strategy is working. Workday raised fiscal 2027 subscription guidance to $9.93 to $9.95 billion, with the trio of Agent System of Record, Illuminate AI features, and the integrated Sana acquisition accelerating enterprise adoption across HR, finance, and procurement workflows. This contrasts sharply with the SaaSpocalypse narrative that erased over $1 trillion from the IGV software ETF, validating that Salesforce Agentforce, ServiceNow AI Control Tower, SAP Joule, and Microsoft Copilot competitors can monetize agentic AI at scale, marking a decisive 2026 enterprise AI inflection point. Second, Bloomberg exclusively reports that China's Shanghai and Shenzhen stock exchanges have formally demanded that listed companies and funds clarify the substantive link between their core businesses and artificial intelligence, marking aggressive regulatory intervention against AI-fueled stock bubbles. The China Securities Regulatory Commission is coordinating with cyberspace regulators and police to crack down on AI-related misinformation and stock manipulation. Alongside new program trading rules, the crackdown targets concept stocks that ride AI hype without substantive business linkage in a landmark policy response to global AI bubble concerns. This comes amid a 20% surge in Chinese AI stocks. More Threads and Medic's IPO push toward domestic chip independence, Cambricon's target of 500,000 AI chips for 2026. Huawei ascends rapid domestic market share expansion, DeepSeek V4 open source release, and Alibaba's $100 billion 5-year AI infrastructure commitment. Combined with Michael Burry's $1.1 billion AI bubble puts, Norway's sovereign fund warning of 35% loss risk, and Bridgewater's danger phase warning, China's market discipline push sits at the intersection of U.S.-China AI geopolitics and financial stability, signaling a critical 2026 China AI investment turning point. Third, Reuters reports that Standard Chartered CEO Bill Winters publicly apologized for his controversial remarks about AI replacing lower-value human capital, though he stopped short of retracting the comments, exposing how AI-era executive communications face severe political and economic scrutiny across the industry. In a LinkedIn post, Winters said he was sorry for the upset caused to colleagues by his word choice. Hong Kong and Singapore regulators have formally sought clarification from the bank, while former Singapore President Halima Yacob publicly criticized the remarks, triggering an international backlash following the Hong Kong Investor Day. Standard Chartered announced plans to cut around 7,800 back-office jobs by 2030, eliminating more than 15% of its corporate function workforce, joining HSBC's 20,000 cuts, Morgan Stanley 2,500, Commerzbank 3,000, and Block's 4,000, contributing to over 158,000 AI-driven financial sector layoffs. Set against JP Morgan's 200,000 LLM users, Citigroup's Anthropic partnership, Goldman Sachs deploying Claude as core financial AI agent, and Treasury Secretary Bessent's Banking AI Cyber Defense Summit, the controversy elevates AI strategy disclosure and executive communications as a critical new dimension of 2026 financial sector AI governance. Fourth, the Wall Street Journal reports that the AI boom drove unusually strong world trade growth at the start of 2026, with semiconductors, data center equipment, and AI-related electronics emerging as the central growth driver, providing landmark macroeconomic evidence that AI investment is reshaping global economic structure. According to the Semiconductor Industry Association, global semiconductor sales hit $298.5 billion in Q1 2026, up 25% quarter over quarter. March alone reached $99.5 billion, a stunning 79.2% jump year over year. AI-related products account for just 1/6 of global merchandise trade, but nearly half of trade growth, an extraordinary structural skew. TSMC posted record Q1 revenue of $35.9 billion, up 35% year-on-year. Korea's April exports surged 48% on semiconductor demand. Samsung committed 110 trillion won, its largest annual investment ever, while SK Hynix accelerated HBM4 ramp. Hyperscaler 2026 capex totals $725 billion across the Big Four, with NVIDIA Q4 revenue of $68.1 billion confirming structural demand. Meanwhile, the WTO, IMF, and Federal Reserve warn of AI infrastructure overinvestment risk, power supply bottlenecks, geopolitical supply chain fragmentation, and US-China AI semiconductor rivalry. The AI boom now stands as both the dominant structural growth driver and largest systemic risk of the modern global economy, the defining 2026 macro theme. That's all for this AI news flash.